Hey, what is going on, investors? Hopefully you guys are having a great day out there. Time to talk about NIO, popular Chinese EV car maker. The company came out with their Q2 earnings today after the bell. We'll talk about what that means. We'll go into the numbers. We'll take a look at the revenue. We'll take a look at the profit. We'll take a look at the number of vehicles that they delivered. We'll take a look at the vehicle margin. We'll also compare that to Tesla, since they are actually a close competitor of theirs in China and maybe potentially around the world one day. Talk about that as well. We'll talk about this stock from a technical perspective. It's not doing a whole lot in the after hours. We'll talk about, is this an area where you can buy NIO shares if you want to add to the shares or start a position in NIO? We'll talk about all of that. The other thing that we got today was Q3 guidance. So Q2 revenues and profit just came out, but obviously this company has visibility into the third quarter since we're kind of a month into it already. NIO is projecting between 23,000 and 25,000 vehicle deliveries. The prior guidance was between 21 and 22,000. Now, in the most recent quarter, they delivered 21,000, we'll call that 21,900 vehicles. So up a little bit, okay? The following quarter is up just a little bit. And actually, when we take a look at the vehicle deliveries, they give it to you here quarter over quarter dating back to 2019 Q3. So you actually get a pretty broad view into NIO. Now, year over year, this company is still experiencing very explosive growth. Went from 10,300 deliveries this is on NIO cars, and in the most recent quarter we delivered 21,900 cars. So basically doubling the number, in fact over a double in terms of the number of cars they delivered year over year. We're seeing quarter over quarter a flattening of deliveries, and I think you'd expect that, and so that could also be a reason why the stock has performed very, very nicely. Look, this was like a $15 stock this time last year, and it rallied hard all the way up to 60, but we've really been in a range, okay? The stock's been between 30 and we'll call it 40 or 50 bucks for a while now. And I think part of it is the growth over at NIO is starting to flatten. We see in Q4 they delivered 17,000 and some change. Q1 they delivered about 20,000 cars, bolted on another 1,000 or so onto that. They're predicting another 1,000 or two on top of this in terms of Q3 deliveries. So we're starting to see the company is starting to flatten out in terms of the number of deliveries that they have. Part of it is to do with the market that they're in, also competition as well, very fierce, not only here in the United States, but probably even more so in China. You have even more EV makers are on the road there. Now, let's jump over to some of the higher level numbers, and then we'll take a look at them in a little more granular detail as well. Take a look at those. Now, keep in mind these figures, most of them, there's some are USD, but most of these are in the Chinese currency. Forgive me if I mix the two up. It's no offense to anybody. It's just out of habit of saying United States dollar. We got our vehicle sales here. So we've got a year over year view. Obviously, when you double the amount of cars you deliver, our revenue went up 127% year over year, but we're actually seeing quarter over quarter, again, kind of a flattening, up just 7% quarter over quarter. I say just, that's still phenomenal growth, but you got to think like a year or two down the road with NIO, like what's their next step? What's their next growth segment going to be? I think those are good questions to ask. Now, the thing I focus on with all these EV car makers is actually vehicle margin. So this is the profit they're making on those vehicles. And we see last year just 9.7%. It's probably a good time to buy a NIO car. They were barely making any money on that. Now, take a look in Q1. We made 21.2% gross margin on our vehicles. Notice that actually slipped to 20%. Now, you might be thinking, what is Tesla's vehicle margin? And that's what I always think about when I look at NIO's. And so I pulled up Tesla's financials. This is their most recent one. We've got automotive gross margin down here. And we've got 25%, 27%, 24%, 26%. So blended over the last year, Tesla's kind of in that mid-20s in terms of vehicle margin. So it makes me wonder with NIO, Can they get to the mid-20s in margin? You might say, well, what's the difference between 4% and, 3 or 4%? Because that's really where NIO is. NIO's at low 20s and Tesla's at mid-20s. I'll tell you what, it's a lot, okay? It's a lot of money that we're talking about here, especially when you're talking to the type of growth rate that NIO has. If they can add a couple basis points to this margin, it would do a lot to this company's financials. The fact that it's trading down low into this 20s and they have not been able to grow it quarter over quarter, not necessarily a good thing. Could be indicative of the competition that they're facing in China. Could be a supply chain issue as well, but it is not as good as Tesla's, at least in the United States. And so that does have me, I wouldn't say concerned, but it is something that I would monitor over at NIO. Now, let's take a look at the revenues here. We've got our revenues here, we got our vehicle sales, and we've got some other sales. We'll just take this as total revenues. So our third column is actually our most recent quarter. So this 8.4 billion, this is in Chinese, the RMB, 8.4, we'll call that 8.5 billion Chinese dollars. And so this is last quarter, we were sitting right around 8, and obviously when you doubled the number of cars delivered that I showed you right here, they went from 10,000 cars up to 21,000 cars. You can imagine the year-over-year growth is just fantastic on that revenue side, okay? We went from 3.7 billion up to 8.5 billion Chinese. Now, in terms of United States dollars, this 8.4 translates to about $1.3 billion. So that is extraordinarily impressive. But I want you to keep in mind, this is a company with a $74 billion valuation. And so they are going to have to continue to grow these revenues. One of the way you grow your revenues is by expanding this vehicle margin. And like I talked about, it actually contracted a little bit in the most recent quarter. We'll see that as evidence of our gross profit. So we've got our vehicle sales. This is what it costs to make these vehicles, okay? They spent $6.3 billion to get this about, we'll call that about $8 billion in vehicle sales. They have these other sales, which I think maybe part sales, maybe servicing the cars as well. Basically a loss leader. We spent $566 to make this $536, so we actually lost money there. So our total cost of sales came in at 6.8 billion Chinese. We made this 8.5 billion in terms of total revenue. That gives us gross profits of 1.57 billion Chinese. In terms of United States dollars, that's $243 million. So yeah, I talked about how we had $1.3 billion worth of revenue over at NIO. And in terms of dollar cost, that's over $1 billion in terms of cost. So this company, in terms of gross profits, okay, this is not all the expenses, but in terms of just gross profits, $243 million, okay? And again, this is a company that is valued $74 billion. So if you do the math on this times this by 4, you're right at around $1 billion gross profits. So you're paying 74 times gross sales, not even operating profit. We're talking about gross profits. I don't need to tell you guys, that is extraordinarily richly valued. Just absolutely extraordinary. This company is going to have to continue to grow, not only this top line, but I think they're going to have to expand this vehicle margin as well, okay? Because of the competition that's in that space, I think these growth rates are going to start to top out at some point. They're going to have to expand margin somehow. So let's take a gross profits. I want to show it to you on a quarterly over quarter basis. We'll look at it in the Chinese currency because that's what we got to go with. Take a look. This was last quarter. We made 1.55 billion Chinese gross profits. Notice we delivered more vehicles. We had higher revenue, but take a look at our gross profits. They barely moved, okay? This is, for all intents and purposes, a rounding error. We went from 1.554 to 1.573, so barely a tick up. And again, that's indicative. Yes, our revenues grew. Yes, our deliveries grew, but unfortunately what shrunk was actually our vehicle margin. Actually went down quite a bit, and that basically means we had a flat quarter in terms of gross profits. Now, the other worrisome thing is is when your margins start to contract, guess what doesn't normally contract? Research and development cost, selling general administrative costs. Notice those quarter over quarter went from 686 to 883. Our selling general administrative actually went up quite a bit. Went from 1.2 billion Chinese up to about 1.5 billion Chinese. In terms of United States dollars, we went from 136 million and 231 million dollars on that general administrative side. We have some other expenses as well. Total operating expenses for the quarter came in at 2.337 billion Chinese. That is about $361 million. Notice quarter over quarter. Okay, we talked about, yes, we had revenue growth. Unfortunately, our gross profits were basically the same because we had margin contraction, and our operating expenses went up quite a bit. They went up from a total of 1.8 billion up to 2.3 billion. So you guessed it, the loss from operation really expanded over at this company, okay? We lost 300 million Chinese all the way up. I mean, that's like more than a double to 763 million Chinese loss, okay? In United States dollars, that's $118 million. Guys, that's a little bit of a problem, okay? From a balance sheet perspective, the company's pretty healthy, okay? But they are going to have to raise money. How do I know they have to raise money? Because Tesla raised money like twice last year. They raised like $5 billion 2 different times. Okay, so if Tesla has having to raise money, they have far better profitability. They have better margins. They have better market share, not only here in the United States, but maybe even in China as well. And so NIO's going to have to raise money because you see here, yes, on the balance sheet, there's a fair amount of cash, fair amount of current assets, but it's nowhere near what this company is going to need to keep things going. So they're going to probably dilute you, the shareholder, as well, and that's going to keep a lid on the stock, in my opinion, as well. Now, speaking of a lid on the stock, man, it peaked up here. It was, like I said, a $14, $15 stock for the longest time or for a little while, and then it really exploded. Came all the way up to here about 66 bucks. This was back in January. Came all the way back down to about 30. Had a nice bump back up to 54, and now we're trading right here around $44 per share. What I see is a little bit, actually kind of what we got going on with Tesla as well. You pull up that chart as well. I actually have it right here. We're seeing a similar thing, right? With Tesla, I'll clean up some of these lines that we have on here, but like a similar type of formation with Tesla. Tesla had a big run up and then is kind of wedged out a little bit. You're seeing the same thing with NIO, kind of wedging out. What you're looking for, I'll take away this top trend line because I just wanted to show you. We made highs here, lower highs, made lower highs here, broke out above it, but we're still basically in a downtrend, in a much longer term downtrend with this stock. You really would want to see on the bull side, so you own shares in NIO, you want to see them go up. You're looking for a break above at least 50. I really think you'd probably want to get above $54. That would take out these highs here and then really bring these highs back up in play. Okay, with the absence of that, you're looking for really the level to hold down here at about $39 per share. Again, that's only about $4 or $5 where the stock is right now. There is some support underneath here. Okay, you've got some support at 36 and then even all the way down here at $32 per share. The other risk that you have with these Chinese EV makers, we've seen it with Alibaba, we've seen it with JD.com and some of the other stocks that are listed on the stock exchange. The Chinese government's been really aggressive over the last few months regulating some of their own companies. It's kind of skirted the EV car makers, and I think this is just me thinking out loud. I don't have necessarily a lot of evidence to back this up, but NIO doesn't have a quote-unquote monopoly like maybe Alibaba and Alipay have, and so I think the Chinese government is going after the far larger and far more dominant companies. I think NIO kind of got wrapped up into that, and maybe somewhat unfairly, and that was probably a buying opportunity for the stock, but really right now, I don't necessarily see a lot of strong catalysts to push this stock one way or another. I think we're trapped inside this box between $31 and $54. And if you break one of these two areas, then it certainly would be bullish or bearish. I wouldn't necessarily want to bank on either one happening. It's right here in the middle, and I honestly think the market has this one judged relatively correctly, okay? From a fundamental basis, a valuation perspective, the company is wildly overvalued. Okay, this is a company that's losing money. They're going to have to raise more money. They're going to have to continue to raise money. They're going to have to come out with new cars. They're going to have to dominate some market share over there in China. And you not only have Li Auto, but Tesla, but there's dozens of others. Here's a Chinese EV player, Airways, explores US IPO. I mean, there's a lot of EV players over there in China that unless you study that space and are reading up on it, you barely even know about them. And so there's a lot. And look, this stock over the last year has run over 211%. We're seeing this year down 9%. It's basically pulled forward a ton of valuation, ton of gains on this one. So the fact that it's going to wave out here and take a breather, not at all surprising. And the other thing to keep in mind is our growth rate is really starting to flatten out. And yes, year over year, right now, it looks fantastic. You're doubling the number of deliveries, doubling revenue, those types of things. Well, unfortunately, I think those days are over. This company we're going to be sitting here at Q2 next year in 2022. I'd be shocked if this company doubles the number of deliveries. Will they have more deliveries? I think absolutely. They make a quality car. They make a quality product. But what else will go up? Will they be able to expand this vehicle margins? These are all good questions for investors to ask. I personally think this EV space is super crowded. I'd want to play, in my opinion, the market leader. When a segment of a market is very crowded, go for the gold medal winners, okay? We just had the Olympics. If you had an opportunity to invest in the athletes before the game started, it would have been really easy. You would have picked the men's basketball team from the United States. You would have picked swimmers from Australia and here in the United States. Women's gymnastics from either Russia or the United States. Okay, same thing here in the EV space. Tesla is number one. Everybody else is a silver and bronze medalist, okay? And so I'd focus my portfolio on Tesla. If you want to round it out with some NIO shares, you could nibble here, but I think this one is very, very richly valued at $74 billion. They're going to have to raise more money, and that doesn't always mean good things for shareholders in the intermediate to longer term. We'll see what happens with NIO. I like their cars. I like the stock. I think it's too richly valued from a technical perspective. Nothing really great to see there. I also don't like that these margins are not anywhere near. They're 20-30% lower than where Tesla is, and they're going to have to expand these margins in a very, very competitive market. I think that's going to be difficult as well. I'll get tons of bull comments down below, and that's why I've spent a lot of this video kind of bringing up some of the bearish arguments, and maybe you can convince me otherwise. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.